Cash flows from financing activities. You know, there's really only two kinds, basic kinds of financing activities. And when I say financing activities, that means how are you going to finance your business? You can either do it with debt or you can do it with stock. If you do it with debt, that means you're going to borrow some money. And if you do it with stock, you're going to sell stock. So any of these kind of transactions that deal with either debt or stock are going to be considered financing activities. So what we're supposed to do in this problem is put together the cash flows from financing activities. So let's start with the first one. Net income was $473,000. That is not a financing activity. It's an operating activity. You got to buy goods, you got to buy some things and then sell them to customers in order to get net income. So that's not a financing activity. The next item, issued common stock for $74,000 cash. That is going to increase your financing activity cash by, in this case, $74,000 because you did one of those two primary things. You sold common stock. Next, we paid a cash dividend of $11,000. That also has to deal with the equity part of the either equity or debt. And in this case, you are giving your stockholders a dividend, which is another type of cash outflow from financing activities. So in this case, when you pay this cash dividend, cash from financing activities is going to go down. In this case, by $11,000. Next, we've got paid cash, $100,000 cash to settle a note payable, and its maturity is $100,000. So that will be on the debt side of financing activities. We're going to pay off the note, so therefore cash from financing activities is going to go down $100,000, or we might say we used cash in this financing activity. Next, we've got purchase of treasury stock. When a company purchases their own stock, it's called treasury stock, and they use it for later on for other purposes like awarding bonuses to employees and this kind of thing. But whenever you do this, whenever you purchase this stock, you're basically doing the reverse of what you would do when you sell stock. So if you sold stock and it increased financing activities by $74,000, when you purchase your own stock, or it's called a treasury stock purchase, you're going to reduce cash flow from operating activities, in this case by $117,000. So when you combine all four of these pieces, you get net cash, in this case used by financing activities, of $154,000. And that, when it says used, means that you're using cash, you're having a net cash decrease from these financing activities.